Let's go. Welcome back to another stock market live stream. Well, I have to say, I'm surprised. Okay, I'm very, very surprised we are going red here. And I'm going to explain why. The odds of a rate cut just doubled. And this is how the stock market is reacting. Let that sink in for a moment. So, Mr. Williams literally managed to talk up the odds of a rate cut from 34% to 68%, and stocks are dumping on that. Like, you've got to be kidding me. It's very odd. On AMD, nothing. You couldn't get green at all. Straight selling. This is, by the way, a condition of being able to go green. Like, I don't think it's an opinion anymore. I think it's a fact. If AMD doesn't go green at the open, it's a bad day. Nvidia as well. Look at this. Straight down. Punishment. Terrible. Tesla joining. Palantir joining. Robinhood's about to lose $100. Bitcoin under 83,000 every day. It just gets worse and worse and worse. Ethereum. Oops. I mean, I think we've now completely removed all of this like Bitmine immersion bullcrap. And it's like all of the enthusiasm from that has been eradicated. Gone. Not great for that. But wow. And like, we're not even in, I mean, we did some fundamental analysis this morning on a few different companies. One of them's got Bitcoin exposure, and we're like, this is bad. You know, nobody really thinks about this yet. But if you go into a recession, earnings go usually down, usually have negative earnings growth. Well, imagine you go into a recession and you have Bitcoin exposure on a treasury balance sheet. Now you're literally recognizing losses from Bitcoin on top of your decline. You know, it's kind of wild. So let's see here. You've got CoreWeave. Couldn't even hold the 68 line. I mean, after NVIDIA earnings, there was enthusiasm that it would hold 79. Lost 79. Now it's 68. You have to realize, CoreWeave going down is very bad. Okay, CoreWeave going down is NVIDIA's puppet. And if CoreWeave goes bankrupt, a huge customer at NVIDIA goes away. I was commenting on this yesterday in the Meet Kevin app. I was writing this out. I'm like, you know, you have to consider that a lot of these larger account receivables at NVIDIA, they're probably companies like CoreWeave and xAI, companies that are, you know, trying really hard to raise cash right now, but they got some work to do, you know, and so hence, you know, the bills aren't getting paid, which isn't great. So let's go take a look at. Maybe we'll start with what the doomers are saying for us today. But let's see here. G20, consumer sentiment, lowest on record. I generally don't think of these as catalysts, but they are just sort of like a reiteration of, you know, what's going on. So this is the lowest figure that people have on personal finance since 2009, dude. 2009. And it says, doesn't Tesla have Bitcoin? Yes, it does. Tesla has Bitcoin. GameStop has Bitcoin. You know, there are a lot of companies that started including it on their balance sheet. Somebody here writes, selling begets selling, unfortunately. Well, it's true, because the momentum turns around, right? It's very true. I mean, I don't think I have anything left to sell. Like, I think I've done all my selling. I'll check that. There might be one more stock that I want to sell. And I'll send an alert out. But, yeah, it don't matter to me. But I know this hurts a lot of people. The figure was only slightly better than the prelim. That's fine. Consumers remain frustrated over weak incomes and high prices. We've got consumers expect prices to rise at an annual rate of 4.5 over the next year. Wealthiest consumers appear equipped to continue spending. That does no good for everyone else. Right. So, okay. What do we have here? Microsoft president says progressive tax promises are putting Washington state tech jobs at risk. Okay. Boring. Wild trading day. Oh yeah, wildest trading day. That's yesterday because we went positive on the S&P like 1.8 and then we like vanished all of that. US stocks see increase in wild swings. Days with S&P swings of at least 1% in both directions. 2022, we saw it 16 times. 4 times here in 25. Whatever. All right, that's boring. So where's some news? Bitcoin has shed about a quarter of its value. New billionaires funding the AI race. Yes. So Bitcoin heading for the worst month since crypto collapsed in 22. Okay. Gender wars are heating up. Don't care. HSBC closed Jeffrey Epstein's account, where JP Morgan turned a blind eye. That's why I hate JP Morgan. Okay, no, that's not actually why I hate JP Morgan. I think they're just a bad bank. They're just too big to fail, so they rest on their laurels, and then you get crap service. You have better banking anywhere else. Like if you have a small business, I think there's no reason why. I'm just gonna shout it out here. You don't have to use my affiliate link. If you want, you can. So it's not like I've got like a sponsorship arrangement with them. But if you go to meetkevin.com/bank, I think you get like money if you sign up through that link or whatever. But when you deposit 10K within your first 90 days, you earn $250 for you and your referrer. Yeah, so okay, there's like transparently my bias. You get $250, I get $250. But I think every single small business owner should have the balls to download this Mercury app and set it up. And then I want you to compare it to your legacy ass bank. And you're going to go, oh my gosh, I didn't even know the features I was missing out on. It's great. I'm very, very excited by the banking product. Like I wish they were public. Like a public company. All right. The jobs report is a peek through the economic fog. September figures show a softening but still resilient economy. Yeah, it hasn't fallen off a cliff. I mean, there's no doubt about that. Let's see what you got here. Fed complained about the fog. Most since April. Welcomed increase after the summer slowdown. 55,000 jobs were gained between May and August. Unemployment rate ticked up because labor force participation rose. Job growth continues to be uneven. Average hourly earnings increased slightly. Softening labor market, but not crashing. Let's see here. No fee on Mercury. Like the stuff we do on Mercury is like no fee. I love it because it's no fee wires, no fee ACH. You get to put your expense categories in for your accounting software into the actual banking app. Like there's so freaking much. That's great. Now you still want your traditional bank because you kind of have to be a traditional bank to get the Zelle integration. But it's okay to have a side chick in banking. Okay? It's okay. You don't have to be like so dead loyal on just like one entity. It's okay to use another entity for the features, right? $20 donation. Kevin, I've been a subscriber since 2019 and just wanted to commend you for all your hard work and dedication to the community and keeping us informed, helping us achieve wealth and financial freedom. Thank you, sir. Oh, I appreciate that. Sir, Mr. Jason 1. Appreciate that. Thank you so much. But yeah, anyway, so that's like, you can go use somebody else's affiliate link if you want. Mine's meetkevin.com/bank. You could use somebody else. If you know somebody else that has like, I'm not doing this for the 250. I'm doing it because I think if you use it, you're gonna be like, okay, all right, yeah, Kevin's on to something here. Especially as a business operator. But anyway, UPS said last month it's cutting 48,000 jobs. We saw Verizon cut, blah, blah, blah. What's the bottom line on this op-ed? Let's see what the comments are. Complaining about UPS. This coffee tastes like water. I wonder if I accidentally ran the Keurig twice on that one. This looks like coffee. No, they just both taste crap. Maybe I just don't want coffee right now. That's possible too. All right, editorial board's boring. No news. Larry Summers. I don't care about Larry Summers. Get this out of my face. What else? Nvidia's best wasn't enough to prop up a wobbly stock market. Eli Lilly touches $1 trillion market cap on booming weight loss drugs. That's insane. The chip CEO staring down Nvidia. Sup, Lisa. Chicago neighborhood with suburban vibe sees home prices soar. Oh, what's the hood? I like Chicago. Big fan of Chicago. I don't own anything in Chicago. I wish I did. Lincoln Square. Right next to Lincoln Park. Do we have a Lincoln Park in Lincoln Square? Uptown. Uptown. Uptown Girl. I love that song. Let's see here. Open. Lincoln Park. Yeah. Interesting. Now, what are the parks called in Lincoln Park? Naturally, River Park, Winnemac Park, Wells Park, Rose Hill Cemetery, and West Ridge Nature. Right. Yeah, it makes sense. And then we got a Target over here. Okay. Cool. Lincoln Park. It's not Lincoln Park, Kevin. It's Lincoln Square. All right, whatever. Kevin's house hack coming to a Lincoln Square near you. Middle class is buckling under 5 years of persistent inflation. I feel like you guys are trolling me. I see people in the chat. Kevin, I need a coupon. They're trolling me. I will say the Alpha report this morning was predicated. I said, you only need a 5-minute test to know if it's going to work today. 5-minute test was in the Alpha report this morning. So pre-market, I'm like, boys and girls, 5 minutes. That's all we need today. Usually we go for 15 to 30. Today, we're going for a quickie. Okay? 5 minutes is all we need. And you know what it was? I said the first 5 minutes after the Williams U-turn and we get a doubling of rate cut odds, we must see AMD and Nvidia show green candlesticks for the first 5 minutes. Otherwise, no bull, bets off. And what happened? We did not get green candlesticks. So this is why I always say, you have a strategy, you come up with a strategy. If you're not making a strategy for trading, you're getting screwed. You come up with a strategy and then you follow the rules. Because if you don't follow the rules, you get emotional and then you fail. This was a tell, man. It was a tell. For the first 5 minutes, we were right here. AMD for the first 5 minutes closed at 205. And that was a red flag to me that after Williams goes bullish, you get a red flag like that. And then Nvidia after the first 5 minutes is at 179 on a close. That was a red flag for me. And sure enough, now I thought we were going to get green. So I was wrong on my opinion, but my strategy was very clear. It doesn't matter what my opinion is. Follow the test. And when the test failed, you don't have to worry about your opinion or your emotion because the test says no go, bets off. Take the money off the table. Usually I trade off of 5-minute candlesticks or 5-minute consistency. Generally, I'm looking for at least a 15-minute open. So why couldn't you join? Yes, come on, man. Like, we're in the middle of trying to raise it's a pain in the ass to change, like, the pricing structure, and we have to change the website and everything, and we're so freaking buried with work right now. Why did you not join yesterday? Oh, wow, dude, I dumped on this. Like, give me a good reason. Tell me a good reason why you didn't join yesterday. Maybe I'll feel bad. But look at this. Dude, Fat Brands, we shit on this so hard, like 2 days ago. It was 2 or 3 days ago. It wasn't yesterday. It was the day before that. On Wednesday, I'm like, I have never seen a company with worse financials than this. And since I said that on the 19th or whatever, it's gone from $1.20 of a stock to 37 cents. Holy crap. That's crazy. So here it says, having the ability to know when you're wrong is income itself. It is, and that's why you have to have rules, right? Because your feeling of the market in a day might not necessarily align with the reality. So you create rules that then can kind of gate your trading, which is great. You did. I can verify that. Oh, thank you. Somebody writes, he did not join because of liquidity problems. Not the liquidity jokes. No, it's going too far. So look at this resistance. Somebody says, I know it's my fault. I promised myself to join 2 days ago, but I was too late. And all NVIDIA were used. Oh, the NVIDIA coupons were used already. I don't know. How do we feel about this? How do we feel about this? Do we want to help out Al? Oh, Ollie Blub.
Poopy doopy.
So, the poopy button. Exactly. Yeah, this is an all-time high resistance for Apple. I actually think, let me look at Apple's valuation really quickly. So, Apple's valuation, Apple, yes, help him out, no sympathy. We're like 50-50 here. Okay, I will abide. We will do like a five-minute poll, okay? We're gonna pull this. I'm not gonna make this decision. We're gonna pull this. Do we help out Al or not? So this is like the Coliseum, okay? Okay? This is what Kevin's saying right now. So you gotta let me know. You know, or what are we doing? What are we doing to Al? Okay? Are we helping Al with 2 A's? Yes. Thumbs down. That's what we're doing. Thumbs down. Thumbs up. Start poll. Okay. I've started the poll. All right. So while that cooks, let me look at Apple's valuation really quickly. So if I type in Apple, let me see here. So in order to see Apple's valuation, I'm going to go to the Meet Kevin app. Hopefully it works. I'm going to go to the Meet Kevin app. I'm sure it will. Oh, I haven't added Apple yet. Okay, so we'll add it. Apple. Let's add Apple. Let's do a quick valuation on Apple. So Apple, select CADs, because we've only been using our Fundy tab in the stock group for about 2 months now. And every day we add like 1 or 2 stocks to our fundamental analysis, which is, I think, really cool. Because we build this like awesome, database, right? And then we can go back and reference that database. And it's so great. Like we did a couple this morning that I thought were actually really good fundamental analyses. And I love being able to go back to them. So Apple, I haven't actually put in yet, but I'm going to put some of it in right now. So EPS on Apple, we're looking at 821 on EPS. And the growth rate for Apple, we're looking at, I think the valuation is elevated right now, if I remember right. And 103 divided by 4. Yeah, so I only have 7% growth on Apple, which means its PEG ratio right now is AAPL. Send it. Wow, dude. The PEG ratio right now on Apple, 4.7. No, dude. No. All right. Time to end the poll. Are we going to let the boy in? Based on the poll results. Okay, we'll do it. You got 68% of you, almost 69% of you said, let him in. 32% of you said you snooze, you lose. So we're going to have to keep it short. We'll have to keep this very short because we're going to raise the price and then we'll do our, some, I'm sure, Black Friday thing or whatever. But you guaranteed get the best price now. Like, it's not going to be less than this. Okay, so NVIDIA. Yeah, this is so expired. What am I doing? All right, the community has asked. 08, we'll put it 824. Okay, we'll do remaining time, display remaining time, display the remaining time before coupon expiration, 824, save. All right, Al, the community saved your ass. You got until, and you got to thank the community here. 824, the coupon's open until 824. I think today, today is Friday. Yeah, we really got to get to getting our other stuff up. We'll do that. We'll do it later. I just got to focus on the freaking market crashing right now. What is this? So, like I said, I like rules and I like structure and I like routine. And I feel like the rules and the routine that we create in the Alpha Report are pretty good. Like there's at the bottom of our Alpha Report every single day for the last 3 weeks, I've been calling out a Ponzi, and hopefully you're not involved in it. And it's not Open Door, though I think that's going down as well. Open Door, since its momentum, it's really been having trouble here consolidating down. Marco says, rigged, bro. I didn't rig it. Dude, do you know that you could get, it's so sad. Look at this. I saw this on X, and I thought it was a great, I bet you this stuff actually happens. The serpent guy. It's parody. How do you spell serpent? Why do I not know how to spell serpent? No, I did spell it right. Oh, it just means the bookmark search isn't working. What good is bookmark searching? All right, F it. I'll just go to profile replies and I'll find it. This was another thing that was wild. So on X, I said, wow, Robinhood is offering, it's actually $16 million. I got corrected. But if you have $6 million in Robinhood, they will list your buying power as $22 million. And I wrote, what the F? Like, I remember back in the M1 Finance days, if you had, $6 million in there, they'd let you borrow $3 million on margin, right? Now they're letting you do 3 to 4x, dude. 3 to 4x. It's crazy. Absolutely crazy. Okay, so where is this serpent guy? So let me find the serpent guy. That was Elon Musk saying he's fat and retarded. Okay, so not that. I've been sending too many tweets lately. This is getting ridiculous. Six Flags is down a ton since Kelsey announced he's in. Soon we're going to be tweeting another chance to buy Bitcoin under 80,000. But anyway, so basically the guy talks about how he makes this parody where he's like, hey, I got hired by a boiler room to go leave shit comments on people's analysis. And so when somebody in the office writes positive analysis on a stock we all want to pump, we go in and we all leave comments and we get paid $2 a comment. Oh, maybe I could find it with the $2. We get paid $2 per comment to basically go pump it up or add skepticism or whatever, right? I can't find it. And so he says they're like analysts and they're serpents and they all have their different goals. And they basically go in and they try to manipulate social media opinion with these posts. Now, he's like, hey guys, this is just satire. But the reality is I don't actually think it's satire. I actually think that's exactly what's happening. I think that on social, and he said, he was joking like, oh, I get paid $2 a post. I actually think that people get, know that they can buy comments on YouTube for 2 cents. You could literally go buy comments on YouTube for 2 cents. And the way you do it, like if you want to know how to manipulate an audience, I've never paid for a comment in my life. Even when I ran for governor, I'm like, that's a scam. If that's what politicians are doing, it's a scam. And I think it's exactly what politicians are doing. But anyway, so what you do is, let's say a YouTube creator makes a shit video on you, you know, they SH9T posts on you, okay? And they're like, you're a scam. So what you then do is you go hire a bot army of like 200 bots, and you go to the main channel and you subscribe to them, but then you click on that video and you unsubscribe on the video page, you dislike the video, and you leave a hate comment. Now, the YouTuber goes in and looks at, you know, like, Vivek's a scam, let's say. Then they go look at their analytics and they're like, oh my God, I got 200 unsubs and 3,000 dislikes? I should stop pooping on Vivek. It's all manipulation, dude. And I think the same thing happens on, you know, Reddit or X. Like, a lot of this is just bot farmed. Somebody here says Benny Johnson does it. Oh, I believe it. I wouldn't be surprised if he does, because he makes a lot of money selling his, you know, live forever juju. Which, I mean, what a great sales pitch, you know? And if he's wrong, he's dead. So it doesn't matter anyway. So he can basically keep the scam going forever. Like, oh, I'm gonna blender up 5,000 pills a day and I'm gonna live forever. By the way, I'll sell you 20 of the pills. Like, it's a total scam, but whatever. You know, so yeah, I do think people can benefit a lot off that social manipulation. I don't do it. You know, I'm gonna put my perspective on it, and you should know I don't do it because people dump on me all the time. I just gonna put my perspective out there and go from there. Okay, so all right, so we helped out Al. Let's go see. Oh, Brian Johnson. Oh, both of us. Sorry, Benny Johnson, Brian Johnson. Same thing. I'm sure they both do it. The fact that I butchered his name makes no difference to my opinion. Well, welcome to those of you who just joined. Al joined! No way, dude! Al joined! What's up? Al actually joined. Nick joined as well. Dick joined as well. Ismael joined as well. Tyler joined, Noah joined, Sasha. Oh, Sasha joined. Now, it could be Sasha Baron Cohen, but I'm going to go with, it's a girl. So that's like a 1 in 6 ratio on a girl joined there. So I'm just going to close that tab and look away because that's a good ratio. But anyway, so let's get back to the sticks here. So do we have any bounce yet here? Tesla. Unfortunately, Tesla does not have a line until the mid 3s. 347 is the next line on Tesla, which is not ideal. You've got, let's see here. He better join. Al was actually the first one of that list that joined. So like, shout out to Al. This guy was ready, man. He had his shotgun loaded and he delivered. He delivered. We showed up for Al and Al showed up for us. We get a shout out to Al in the chat. Anyway, so Intuit, I was really hoping this son of a gun would crash because I want to buy the crap out of. I wanted to get dumped on, so I don't own Intuit, but I wanted this to dump so hard so I could buy it. It didn't dump, but that's the nature of stonks. So Apple's doing well, 270. The valuation is nuts. You're at a 4 peg on Apple. Apple doesn't have the. I think people are like, oh my gosh, well, you know, you've got a new sales cycle for the iPhone. Yeah, whatever, dude. We have a new sales cycle for the iPhone every freaking year. Target's got a nice dead cat bounce here, 3%. Dude, their dividend yield is fantastic. Now, what their strategy is, I think we analyzed them, 2 or 3 days ago? We analyzed what their corporate strategy is to get back to growth. And I don't like it. I don't jive with it. I actually think they're making the Dave & Buster's mistake. And Dave & Buster's is cheap right now. I think Dave & Buster's is under $500 million. Oh, it's at $13.37. Let's go. Let's go. $13.37. That's elite. Okay, so you got to look right here. You've got a market cap of $463 million on Dave & Buster's. Like, it's gotten cheap. You know, that's It's getting low. And I think Red Robin is like 60. Red Robin right now is a $69 million company, right? Steve says, been following for 6 months. Sounds good. Looks good. So I joined. Let's go, Steve. Welcome, welcome. Yeah, we got a sprinter for shadowing now. All right. So we got Bitcoin. You got Bitcoin 82.8, not great. You lost 83, fine. But Nvidia's actually trying to bottom out here. So I've got Nvidia trying to bottom out. I've got AMD trying to bottom out. I've got the Qs trying to double bottom. Look at that double bottom right here on 580. I don't have a line for it, so it's weak. It's no man's land. Fat Brands is going bankrupt. Wow, if only the fundamentals could have said, oh wait, they did. We looked at the fundamentals and it's crashed like 80% since then. So then you've got Palantir at 150, fine. Somebody says Red Robin isn't that bad. Red Robin's good, it's good food. The problem with Red Robin is they have a lot of debt. Symbotic discount. Let me show you really quickly, okay? So remember, my goal is not to tell you exactly what to do, it's to teach you. And so that's what we, every single day when we do fundamental analysis, we're like this morning, course member live streams, an hour of like alpha report at first and then learning and studying stocks, doing it for you and teaching. But like as an example, let's go look at the Robinhood 10Q right now. And then what do we have? Let's see, 11, okay, 12 minutes left on the AL coupon. I should have changed the coupon to AL instead of NVIDIA. But that's okay. I mean, it's all right. That would have taken more work and time. It's okay. Al, we could all thank Al for opening that window for 12 minutes or 20 minutes or whatever we did. All right, let's look at Red Robin. So here's the problem with Red Robin. It's their debt, boys and girls. It's their debt. So they have current liabilities. So bills due within the next 12 months of basically all of this minus 14. So I have bills due of 171 mil of bills due. Of bills due in 12 months. Well, it's really within, right? There we go. And look at the cash they have, guys. Come on, man. 21 mil of cash. And that's only because JP Morgan gave them bailout financing after Fortress. Like, this company has already gone to Fortress to get a loan. That's a red flag. You start going to Fortress to get money, it's not good. So what the hell? Like, you tell me, okay? If you had $21 million on your desk, plus accounts receivable of $12 million, hell, I'll even add in your inventory. Let's assume you could sell all of your cancer hamburger buns. That's a joke. Ish. So let's say you could sell 100% of your cancer hamburger buns and your trans fat french fries. That's a joke. Don't sue me, bro. Okay, 26 mil plus 12.5 plus 21.6. You have $60 million to pay $171 million of bills. You have no money. You're out of money at Red Robin. They are literally dumping, as far as I'm aware, I think they're selling their own stores, which is called monetizing the balance sheet, okay? So if you go to plant, property, and equipment, they didn't in this quarter. It's actually positive, but in the past, wait, no. I'm right. They're monetizing their balance sheet. This right here is a big red flag. If you have never heard about this, go ask your AI tutor, what the F is monetizing the balance sheet? It's when you are so damn broke, you need to sell your SH9T properties just to pay your damn bills. That's called monetizing the balance sheet. That's what happens when you have negative plant, property, and equipment here. Just something to think about. Net cash used in investing activities, negative. So they generated cash. Okay? How did we generate that cash? Hold on a second. Hold on a second. This might be a little confusing how they have this listed here. because in my earnings calls, I recall them selling assets. I'm going to have to verify this because I'm a little confused by the parenthetical aspect they have here. But let me put it this way. Let's fact check this with the earnings call. I'm not going to do it right now, but fact check it with the earnings call. What they've been doing is they've been selling their individual owned real estate and they're doing lease backs. So they'll say, hey, we own this $40 million property. We'll sell it. We'll raise the cash, and then we'll use that to pay our bills, and then we'll lease it back. So it means you're kind of like gutting the business from the inside out. It's somewhat interesting if you think about it that way. Now verify that in the in their earnings call. But that is what I've seen Red Robin do in the first place. If somebody writes, wait, people go to Red Robin. I used to work at Red Robin. And they were mean to me. No, I actually just became a real estate agent. I'm like, make me a server now, otherwise I'm going to go become a real estate agent. And they're like, they sat me down. But Kevin, you're not going to make it in real estate anyway. You've got it really good here. You're making $900 a month. We got you on the shift 3 times this week. And if you're good, maybe in 6 months we can talk about having you go from bussing tables to waiting tables. But for right now, we need you bussing and we need you on the line making sure those burgers are smiling. And then I said, thank you, and promptly quit. Got my real estate license. I already had my real estate license at that point. I'm like, peace. Peaced out of there. I started selling real estate. Took me 10 months to close my first deal. And my net commission was greater than I would have made in a year and a half working at Red Robin from one deal. That's how it started. Anyway. So where were we? 83. Okay, are we coming back? Are we coming back or not? Not really. We got this little double bounce going on here. All right, let's go to the information. Let's see what they have. Okay, let's see if the information has anything. And then what do we have left? When did we say we were killing the Al coupon? I think we said we were going to kill it at 8:24. So there's 6 minutes left on that. Okay. All right. So, oh, interesting. Look at this. I just saw this. November 10th, 11 days ago. Yeah, because you're out of damn cash, people. You have no money. Oh my gosh, look at this. Robinhood is doing a $40 million shelf because they're out of money. No duh. This is why, friends, this is why even CNBC says the following.
Kevin is much more interested than most people, by the way, in the balance sheet.
What a surprise. They're out of money and they're going to go sell the stock. So they're going to sell up to $40 million of stock so they don't go bankrupt. You know? I mean, it's not a surprise. Red Robin Gourmet Burgers. My dream is for Red Robin Gourmet Burgers to go into bankruptcy, and then House Hack is gonna buy them out of bankruptcy for a penny on the dollar, and I don't even know what we're gonna do with it, but we're gonna make money with it. And that's my dream, just to stick it to them. I mean, House Hack is worth more than Red Robin is right now. $69 million, and these folks are having to dump stock. That's why it's probably going down, by the way. I mean, I know the market's been going down as well, but, oh, yeah, look at this. So they did their shelf here on the 10th. Look at that. The very next day, look at that candlesticks. Look at the volume here. The volume skyrocketed the very next day. I get it, it's after earnings, but still, earnings day and the next day. Yeah, man. Yeah. Okay, cool. So what else? Yo, what the hell, man? Like I said in the alpha this morning, dude, if we can't even, if after the rate cut bets double, the odds of a rate cut double and we can't go green, bad day. Bad day. Don't buy. Don't buy. That sounded a little Jim Cramery. I'm sorry you had to hear that. I didn't even want to listen to it. I don't even have my headphones in, so I don't even really know when it finished. I'm just guessing. All right, Visa and MasterCard are moving fast into stablecoins. This, by the way, we've known about, okay? How do we know about this? Because if you've been watching this channel for a while, I feel like, I don't think this is insider information, but I went to a, Crypto.com invited me to go to Vegas, and then they're like, oh, Kevin, come clubbing with us. And I'm like, bro, no. Like, those are my green hair days, okay? Green hair days? Let's go clubbing. Now, I got 7 kids. No, we're not going clubbing. They're like, Kevin, you're coming to the club. I'm like, okay, I'm at the club. So, I go to the little, table or whatever where they've got all the suits. Because I don't know, they're all suited up like they came straight out of Wall Street. And I found a Visa guy. And I'm like, yo, Circle eating your lunch, bitch. And then he's like, man, I'm gonna fight you right here. We've been doing stable coins longer than they've been doing stable coins. And then I'm like, oh, that's interesting. And that's actually made me bearish on Circle. It had its IPO momentum, but then I'm like, bro, this stablecoin stuff is going to commoditize, especially as these credit card companies get into stablecoins. Of course, it makes sense. They got all the money in the world, and they've got all the partner connections. They've run everybody's wallet. Everybody's got a Visa and MasterCard card in their wallet. So it totally makes sense that, they're going to eat the stablecoin producer's lunch, or at least they're going to compete and commoditize it. Both are bad. If they destroy Circle because their product is better, then they win and Circle loses. If they just commoditize it and offer it for free, then Circle also loses. And I will say, Circle has literally now gone full circle. Hold on. Circle. There you go. There's full circle, baby. So, if you ever want insight, just go to the club with a bunch of drunk suits, and I guess you'll find out what you need to know. Maybe that's how the White House makes so much money. They get everybody liquored up, and then they get all the knee bending. Hey, Elon, have another glass of wine. It's actually kind of brilliant if you think about it. Supposedly, Donald Trump doesn't drink, and if that's true, which I think it is, then it's actually kind of brilliant, because then he can liquor up the people he's like negotiating with. And yeah, it's kind of brilliant. Oh, you don't like my shiny forehead? Fine, we'll fix it. There, powder, baby. I haven't used that in like 3 years. I don't even know if there's any residual powder. Okay. Oh, 1 minute left. Yeah, it's going to expire in 20 seconds. That's crazy. All right, good job, Al. All right, let's go back to the information here. That was a lot of ranting. I'm sorry. Okay, so back to ranting, back to December. Let's see here. We got Altman memo, forecast rough vibes. This was interesting. I saw that yesterday. And then there's also private credit drama that we saw. Let me pull a couple of these things up. So there was, let's see here. We looked at the consumer sentiment, the private credit drama from yesterday. Let me pull that up quickly because that was crazy. It's 48 pallets. That's who it was. 48 pallets was another failure of private credit. 48 pallets, Bloomberg. And it's expanding. It's getting ugly. BLS axes the October CPI report. Oh man. Yeah, okay, this was it. Wow, really? Now we're not going to get October CPI either? This is a joke. I thought Trump sent him back to work. He just wanted the September data. Because he probably had insight that September was going to be good on jobs and good on inflation. And so now we're not going to get the CPI report either. So Trump cancels CPI report for October. Next data release after Fed meeting, again, like jobs, on Dece 18, right before Christmas. That's a pisser. And rate cut bets still did double this morning, but that's interesting. All right, so this private credit, hey, the Qs are trying to go green here. We'll see if it can actually hold. So take a look at the private credit issue. Private credit. That's right, jot this stuff down here. So private credit, let's see what we got here. Let's see here. Okay, private credit. Okay, what do we got? Private credit lenders are poised to take control of a pallet company, 48 Solutions, a year after providing $1.75 billion of debt. Wow. Okay, so another private credit failure, 48 pallets, gets $1.75 billion loan last year. Now fails, stops making payments. I think it was in August they stopped making payments. Stops making payments in August after moving to payments in kind. Now trading debt for company equity. So they're basically, that's essentially a bankruptcy restructuring. Essentially a bankruptcy style restructuring. Like that is a private credit bankruptcy in my opinion. And you could see that right here, firms exposed. So this would be firms exposed, KKR, BlackRock, Carlyle Group, all these big puppies in private credit all get exposed. And now they're going to take shares in this money-losing company. See, look at this. So they originally marked them down to 86 cents on the dollar, marked down to 86 cents on dollar last year, then 46 cents on dollar in Q3, then zero, then near zero now. So it goes really fast. And I'm pretty sure they said they stopped making payments in August. Yep, there it is. Stop paying interest in August. Yeah. So another private credit failure, essential bankruptcy. All right. Insane. Okay, so that's not great. And then this Altman thing, I thought this was really interesting. Somebody says 75% chance of a Fed rate cut. Let me look. I'll look. Let me see here. Okay. Oh, a few more of you joined with Al's thing as well. Just quick shout out to those of you who joined. Michael, Matthew, John, Pascal, Paul, Jason, Matt, Eduardo, Tyler, Jeffrey, Sonny, Calic, Jason. Oh, I can't even scroll anymore. Sharam. Thanks for joining. Welcome aboard. We'll do great work for you. Okay, Qs go green again.
Gain the lead.
Let's go look up. What was I going to look at? The world interest rate probability. 68%. Yeah, thanks, Al. Welcome aboard. You know, we're gonna pin Al here. Al's a good person. There you go. All right, so 68% chance of a cut right now. Okay, cool. Great. So now the Altman memo. Let's look at this. So Altman, I guess this is going to be more of like an AI news. So I'm trying to start categorizing these so that in the Meet Kevin app, they're a little easier to sort by, which is kind of useful for folks. Remember, you can get the Meet Kevin app totally for free. Just type Meet Kevin in on Apple or Android. So Altman told colleagues last night that Google, Sam Altman, complained that Google could create some temporary economic headwinds for our company as Gemini takes off. So to me, this is actually a red flag. This is a red flag when you're so worried about the economic health of your company. It suggests you're too much in debt and worried you're not going to get more financing. Right? Basically, it's like, oh my gosh, people might not buy our junk debt anymore. Like, this is bad. So this was fascinating to me because it's a red flag for the, the cycle. Now, again, I don't think we're at the Burry moment of Nvidia. That's still to come. That show's still coming up, boys and girls. Okay, they say we're catching up fast. Technological lead has narrowed. Oh, 100% their lead has narrowed. Let's see. Google, the search app, blah, 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 blah. All right. Which also suggests they're hitting an innovative wall. That's also true. Yeah, that's a really good point. Also suggests they're not progressing as much in their product. If basically your competition is catching up so quickly. Okay. So that's interesting. So we talked Circle, Ron DeSantis, Las Vegas, Kalshi is king, don't care. This is all old news. All right, that's all freaking boring. What about Economist and FT? Let's see what they have for us today. What is this? Welcome to Anything Goes America, where the loosening of rules and tolerance of corruption will lead. Yeah, that does bother me. Why governments should stop raising the minimum wage? Will Britain copy the asylum policies? Let's see what they're saying here. This is going to be a dump on Trump, probably. Harry Truman left office. He had many opportunities to get rich. He turned them down. I could never lend myself to any transaction, however respectable, that would commercialize the prestige and dignity of the office of the presidency. That's exactly what's happened today. We have commercialized the office of the presidency. It's a good line. Truman could now be flying private and be paid at speaking engagements, soliciting donations for his foundation, and watching his daughter serve on company boards and former staffers run their own lobbying shops. You could even get yourself a free Boeing 747 from one country seeking his favor and a $130,000 gold bar from another, which his family has struck cryptocurrency partnerships with. Yeah. All right. We know. Let's go on the next one. All right, let's look at the sticks for a moment. Okay. Qs go green. Good. Oh, we got a bounce. Apple's still high. Back at 83 here. Okay. Target. Oh, snap. Look at that. Added another %. We've got Nvidia. Nvidia might try to go green here. Maybe you finally flushed out all the sellers. Look at that. AMD, nice. Somebody writes, looks like Truman sucks as a businessman. Yeah, not enough corruption, huh? 42% on fat brands. That's still dead in the water. CoreWeave. CoreWeave's really, this is good. Like, you do not want CoreWeave to go down, because if CoreWeave goes bankrupt, it's really bad for the whole AI cycle. Okay, cool. So we'll watch this. Webull CEO on earnings. I don't know that I care. Well, let me see if they're saying anything interesting in a moment. T has something interesting for us. I don't know if they do. Behind the AI bubble, another tech revolution. Somebody write. Peter says, install some. Well, welcome. You know, the benefit of it is, and I really encourage you to do it, customize your notifications. You know, go in, customize the notifications, and make it so that you get notified for the videos you want. Because you don't want to miss the ones you want. This week, Jensen, leather jacket, bellwether, sensei, blah, blah, blah. Okay, get to the point. What's the new revolution? What's more notable are LeChu's plans. Okay. LeCun thinks that LLMs have reached their limit. Instead, he noted that he now favors world models. Okay. An approach to sorting information inspired by how humans learn. LLMs are great. They're useful. We should invest in them. A lot of people are going to use them, but they're not the path to human intelligence. So we need to take a step back. Does it matter? Some techies think not. Okay. Until now, AI is a bubble fears, blah, blah, blah. LeCun is one symbol of a second risk. DeepSeek, variants of AI LLMs, blah, blah, blah. The tech behemoth IBM said it's developing variants of so-called neurosymbolic AI. Oh, CoreWeave gains the lead. That's great. Qs keep moving. Looks like the selling flush might finally be over. That's great. Let's see here. None of the alternatives seem ready to fly. Might a new AI approach break the control of big tech? Oh, well, no, they'll just adopt it. Okay, so they're basically, yeah, I mean, this is just yapping about him leaving Facebook, basically. Okay, what else here? Macron's legacy. Wall Street is banking on too many Fed rate cuts. Vanguard warns. People love a good rate cut. Federal Reserve will borrow less than Wall Street. It will cut borrowing costs less than Wall Street is anticipating as a massive spending boom in artificial intelligence fuels robust growth, according to Vanguard. Oh, they're bullish. They're bullish. Tommy writes, buying my first house at 130 with lawyer to sign. Let's go. Congratulations. Too many Fed rate cuts are priced into the market. The market is relying on that. Okay. Whatever. Nothing exciting on the FT, honestly. Or the Economist. All right. What about... We already looked at the Wall Street Journal. We haven't looked at... let's pay attention to the left for a moment. Brief moment. Uncertainty of AI spending, New York Times, 3 potential factors behind the market turmoil. Oh, talk dirty to me. Let's see here. Buckle up. Global stocks of Bitcoin, blah, blah, blah. Valuations, Fed, crypto. You know, it makes you wonder, like, if you get these ETF liquidations in crypto, you know, companies like iBit, they're just going to have to sell, unfortunately. So they become forced sellers. So iBit, you know, it's done great since launch. It launched at the beginning of 24. And so it's done great since then. You're still at almost a double since launch. Someone in the chat says, you got to hold 585? Yeah, that'd be nice. I don't have any lines here. I think we're still in no man's land here. Be nice to get back to 595. So, VIX is coming down. Nice decline in the VIX. That's good. We like it. All right. Okay. Fed. What is this? Let's see here. Trump administration pushing Davos, first round bids for Warner Brothers, economic albatross. Target mentioned affordability problems. We know. Walmart says lower income families have been under pressure as of late. We know. 29% of lower income households are now living paycheck to paycheck. Consumer sentiment dropped nearly 30%, right? Whatever. Like, all of this we've already known. Like, none of that is really news. Okay. Fine then. Fine. Then we'll go sailing. No, let's go see if there are any fun videos that we can look at. All right. So, and how's our 10-2 spread? The 10-2 spread right now is 56. Shock prone. All right, let's see what Fox News has. We hear you. Vance tells Americans to be patient. Peter Doocy, Chicago mayor, downplays attack. All right, big standoff. Trump to meet Mamdani. This is micromanaging. Trump's executive authority. Blah, blah, blah. Nicki Minaj speaks. I really don't care. Eric Trump, when Caitlin Collins is on our side, you know it's egregious. Oh, this is about Crockett. All right. Whatever. Boring. What do we got over here? They're after us. Former Trump advisor warns America is under cyber attack. Okay, that's old news too. GOP rep exposes shocking extent of China's hacking operations. Okay. They're in everything. TP-Link. They're in everything. Okay. JP Morgan strategist explains why some consumers feel like they're going downhill. Okay, let's hear it.
You know, there's a whole lot of sayings and catchphrases and axioms on Wall Street. In fact, I think maybe that's not only
it's pointing straight up. Big hand is barely growing. And that's really what's going on in income. The top people are doing very well. Bottom people are making progress. It's just very slow. But what it feels like is what people call a K-shaped expansion, right, where the big hand, everybody else, is actually going downhill. They're not going downhill. It just feels like they're going downhill because the wealthy are doing so much better than everybody else.
You know, I like that how you made a counter analogy.
He's saying it's a relativity issue. That's interesting.
That's your top whatever percent, and everyone else is the E. But people, I saw Indeed, a chart from Indeed, and they had hourly wages and inflation. And according to them, inflation is growing slightly more than hourly wages. So people maybe aren't doing that well.
Well, that's over the last few years, it has still been the case. The wages have been growing a little bit more than inflation, but you're right to worry about it. And I think that's one of the things that's going on right this quarter, because we're seeing a little slippage in terms of wage growth, but we're also seeing, those tariff increases. Yes, the tariff rates come down since the start of the year or since the middle of the year, and that's good. But those tariff increases are beginning to seep through. And I think that is going to squeeze the average consumer going into the holiday season. I think upper income consumers are doing very well, but the average consumer is going to get squeezed by tariffs.
Boring. All right. Howard Lutnick. This will blow you away. Okay.
Now, great pleasure to bring Commerce Secretary Howard Lutnick back to the show with a smile on his face.
Slutnick.
Mr. Secretary, it's wonderful to see you. You take a stab at this. I read about this pessimism and all these websites and internets and this and that and polls that I don't believe for a minute. Howard, you're on the forefront of this whole. Why is there so much pessimism? What's going on here, Howard?
It's just fake news. You've got so many factories being built.
Guys, it's not actually real. It's all just fake news.
I know people talk about when the factories come online, but the construction jobs alone, you can't invest $3 trillion a year without driving our GDP off the...
Oh, yesterday we had an all-time high on daily active users on the Meet Kevin app. That's cool.
Charts. You're going to see 4s, you're going to see 5s, and you're going to see 6% GDP growth under this president because the factory's coming home, the tariffs are bringing them home. You have never seen construction the way you're going to see it. And then when these factories come online, wow, are you going to see numbers nobody's ever thought possible.
You know, Secretary, it's not the last word, but just take today. The jobs report today came in basically twice as good as Wall Street predicted. Twice as good as Wall Street predicted. What do you make of that?
Well, I think, it's just setting up for where we're going. The big, beautiful bill starts January 1st. You start getting depreciation. The factories are going to come online. You are going to see job numbers in the second half of next year that are going to blow you away. And these are just the right kind of jobs. We've got to train these people. We've got to get those people in America into the workforce for these great paying jobs. And I think really America, the golden age, which Donald Trump talks about, he is literally saying we are going to build manufacturing in America, and these jobs are going to blow the numbers away.
Howard, should the Fed be cutting interest rates right now?
Absolutely.
Of course they should. I mean, you've got really a beautiful economy. The economy can grow with lower rates. These rates are high because of the inflation of the Biden administration. You've seen them all
Biden's
come off.
fault.
Now you've got the president cutting prices across the board. We're going to drive affordability across the board. He's focused, razor focused on affordability and driving it down. You're going to see inflation coming off. You're keeping energy prices low. You've got tax numbers coming in next year. I think rates should be at least 100 basis points lower. That will free up affordability in housing, and that will help America really reach its full potential.
What's your take on this tariff dividend distribution next year?
Yes, the check.
It's not spawned a lot of enthusiasm on the Hill. The president continues to mention it. What does Howard Lutnick think?
Well, look, the president wants to make sure the American people understand that the tariffs are there for their benefit, right? That yes, it's going to drive down our deficit. Yes, it's going to make the country stronger, but he wants the people of America, the American people, to appreciate these tariffs. And he knows if he puts money in their pocket and says,
That's
look,
funny. Somebody's asking me about Circle. We just talked about Circle and reamed it if you scroll back in the live.
By the tariffs, they'll better understand how important this is for America. And so that's why he's talking about it. And, he understands the American people the best, and he's easy to work for. I mean, today and every day, it's really amazing to work for. Today, he had all the freed hostages up to the White House. I mean, imagine that, all the freed hostages up to the White House. There is no president who could do the things that he accomplished.
That's a point. Let's just pause there for a second. That's a very out-of-the-box point. How can a country as great as America, this is the greatest country in the world, all this, if you believe these lefty media, everyone's so pessimistic. Why? For Middle East peace that we never thought we'd see in our lifetime? I would say that's optimism. 135 million people, some odd, Howard, take my word for it, own stocks one way or another through exchange-traded funds and index funds. 135 million people. It's a little short of the entire workforce, okay? Jobs are rising. We just had a report today, roughly 100,000 private sector jobs. Where's the pessimism? Middle East peace? Record stock market for, by the way, unions, pensions, who are Democrats, they own stocks too. They're sharing in this. Jobs are rising. Streets are safer. The border is closed. I mean, where's this pessimism? I know the websites. You do too. I know the internet sites. I know the Twitter X sites. But does that mean we have to believe it? That's what I'm really asking you. Why is this stuff and you got to fight back. You got to go out and sell it better, Howard Lutnick. I guess fight for it. Let's follow the president's lead. You and Scott and Kevin
All right,
and so forth.
get to the point.
So he runs the United Auto Workers.
Right.
Okay?
I know.
And he called me and he said, I can't believe I'm calling a Republican Secretary of Commerce to tell him you have the best administration and you are fighting for the American auto workers. God bless you.
Mm.
I mean, who gets that phone call but Donald Trump's administration, right? We're out fighting for union workers. We're out fighting for the American people. It's their jobs that we care about. And Donald Trump has got American workers' backs. And we are going to deliver those numbers. We're going to deliver jobs, and we're going to...
That's the way I look. Traits and fruits and bananas and whatnot. Those struck some people, and I was skeptical myself. A little bit punitive tariffs.
started this process on April 2nd. He wanted, as you know, trade deals. Well, produce in America, you can export your goods. Finally, the president has, and let's focus on affordability. So what
Too much propaganda.
the president's going to focus on the small things that touch the American's pocketbook, and he's going to bring them all down. He's going to use the power of what he is practicing better.
Okay, and help kind. You know your philosophy. Tell us national defense.
So let's just talk about the Intel deal, right? Biden gave you money. The American taxpayer at least has got to get a fair shake for it.
All right.
Quantum.
That was very boring. I'm dying on the inside. Okay, that was boring. Let's see here. Let's see here. Wow. What else is there? That's boring. That's boring. What's this? Asmon says, "So it begins," and has a picture of Trump.
Trump administration transfers education programs to other agencies in dismantling push. The White House announces it's shutting...
Oh, this is the DOE. Yeah. Boring. All right. What else? So it looks like we're recovering still. So let's look at some of the recovery that's going on here. We've got vol dropping, which is nice because, you know, it's certainly spiked. Tesla turned green. Oh,
Gain the lead.
that's nice. You still don't have you still don't have green on AMD or Nvidia. So that sell's still continuing. 84 though on Bitcoin. Nice move up on the Qs. That double bottom. You know, we were watching this. We're like, hey, this looks like a double bottom here. As we were live. Good. So that's playing. Good. And then CoreWeave's recovering, which is good. Sims recovered. It was having a rough morning. Restoration Hardware pops 9%. People are buying the dip on some of these consumer plays, which is interesting because consumer sentiment just came in at like the worst ever. But it's like a recovery play. You know, all these companies that have sold off like crazy, people are buying them. Red Robin, Dave & Buster's, Target. The consumer names are popping, potentially as a delayed aspect to the jobs data that we got yesterday, right? So, let's see here. CoreWeave. Okay, MicroStrategy, still red. Supermicro's at $32. Wow. Starbucks, even Starbucks, look at this. Yeah, Macy's, Cake, Cheesecake, all of those consumer names, let's put them up at the top. All the consumer names that have sold off, Play, Red Robin Gourmet Burger, we've got Starbucks, probably means Chipotle's up too. CMG, it is, Target, it is, all of them up like 5%. So, could be, you know, rebound enthusiasm, but I think it's more John Williams this morning that drove this. So we're finally past where we were this morning. And AMD and Nvidia are finally climbing nicely, which is good. So Williams this morning, I was bullish when Williams yapped. Let's go look at if we could get some details of what he said. Maybe we can watch what he said. So, John Williams, Fed. I need to find it from today. Really? Where'd he talk?
Monetary policy is very focused on balancing the downside risks to our maximum employment goal.
Okay, perfect. Yeah, that was it. So we'll take a look at that in just a moment. So it wasn't actually a long speech. And then Fed should be moving in a dovish direction, says Myron. Let's go pull that.
Governor Myron, good morning. Good to see you once again. Thanks for being here.
Thanks for having me back.
We've got to start with the labour market. Your reflections on what we saw yesterday. Does it lean one way or the other?
Yeah, I mean, I think the implications of yesterday were obviously dovish, and if anyone was on the fence, I would hope that this would move them in the direction of cutting. I mean, you saw the unemployment rate edged up a bit. You saw some other indicators like an increase in permanent layoffs. Those are indications that the labor market has been affected by restrictive Fed policy. And given the outlook for inflation, there's not really much of a need to be as restrictive as we are.
And yet on the committee, we have pushback. Almost immediately after that, Fed Governor Michael Barr had this to say: I'm concerned that we're seeing inflation still around 3%. Inflation's closer to 3 than it is to 2. What do you make of that argument? How persuasive is it?
It's not persuasive to me, and I'll tell you why. Almost all of the inflation excess is a mirage. It's not indicative of supply-demand imbalances. And so, for example, if you look at the housing market, right, market rents have been running at about 1% for a couple of years. Measured inflation in the index is actually much higher than that because it takes a really long time for the index to converge down to where market rents are. That's a statistical artifact, right? That's an artifact of the statistical measurement process. It's indicative of a supply-demand imbalance that was there in 2022, 2023. Monetary policy works with lags. It has to be set now for 2027. So when you look at the housing data, right, you see market rents running about 1% for a couple of years. There's no supply-demand imbalance there. We should not be setting policy for 2027 based on a supply-demand imbalance that existed in 2022 or 2023. That doesn't make any sense. There's other things, too, like portfolio management services, which confuse quantities for prices. This stuff is all well known. If you look at market-based measures of inflation, they're much closer to 2 than they are to 3. So I think that the excess, the overage, is a mirage, and it's a mistake to ask people to lose their jobs because of quirks of the statistical measurement process.
And you've got to put out new forecasts on December 10th as well, which is going to be complicated by the fact we've had limited data more recently. How relevant do you think the calendar actually is? Because I'll offer you the perspective on Wall Street at the moment. It goes something like this. The meeting's on the 10th. You don't get the data until the 16th. The Fed's kind of constrained by that. They can't do anything. What's your perspective on that?
Yeah, so as I said a moment ago, monetary policy works with lags. It would be much easier if it hit the economy immediately, but it doesn't. It works with lags. So you have to set policy based on the forecast. So the data matter insofar as they affect your forecast. It doesn't make sense to be setting policy for where the economy was 3 or 6 months ago. We should be setting policy based for where the economy is going to be 12 to 18 months from now. And so if we have data, it gives us the ability to update our forecast. But the lack of data doesn't mean that we don't have a forecast. We did have a forecast. And all it gives us is opportunities to falsify our forecast. And there hasn't been anything in the data, in the news, in media stories, in private sector data, alternative data that's available to us, that would make us think that the forecast is somehow nullified and there's been a big shock to it. So if anything, all the information that we've got in the interim since September FOMC has inclined to the dovish side. You know, we got weaker inflation than people expected, and we got a higher unemployment rate than folks were expecting. So all of that information should push one in the dovish direction.
But there are still Fed officials that are looking for more data. And they have said they're data dependent. They want that insurance that they're cutting right now, and it's the right time. Potentially the unemployment rate might be moving up to 4.5% on December 16th. Would you be in favor of just moving the meeting if it meant others felt more reassured to cut interest rates in December?
So, I haven't really thought about that, and it's not a conversation that
It's actually a good question. Move the meeting after the data.
I agree. The meeting dates seem kind of arbitrary, but at the same time, there's a lot of stuff that gets done as a result of those meeting dates, and people have investments and contracts and other decisions that are tied to the timing of the meeting date, and I don't know to what extent moving those dates would be disruptive for all that. So it's something that I'm not sure about, but. This ultimately comes down to the question of data dependence is what you do when you don't have a forecast or when you don't have any confidence in your forecast, right? We should be forecast dependent, not data dependent. Being excessively data dependent is to be too backward looking. And if you're too backward looking, you necessarily are going to have the wrong policies.
Neil Dutter writes in, he says, the only question that matters for you is, will you dissent for 50 if you believe it means not being able to push through a 25 basis point cut?
Yeah, so absolutely not. I would absolutely vote for a 25 basis point cut if my vote were the marginal vote. There's no question about that. To do otherwise would be to cause real harm to the economy for purposes of vanity, and that's not who I am.
Going into next year, talking about the forecast of what's going to happen, a lot of economists who come on the show expect a reacceleration on the backs of the tax refunds and some of the other stimulative measures that could come early early next year. How do you factor that into your forecast for ongoing weakness in the labor market and the consumer?
Yeah, so I think that, I have not been what I would think of as excessively pessimistic on the economy. I do think policy is restrictive, and I do think that it's too restrictive, and we don't need to be. And the longer we remain restrictive, the greater the chances that we are the source of an economic downturn, which we should not seek to be. I think that many of the factors that will be kicking in over the next 12 months that might be supportive of GDP growth are things that necessarily don't have hawkish implications for monetary policy because they affect the supply side. And when you think about things like relaxing regulations, and I think that has been going on at actually an impressive pace, these are things that push out the supply side of the economy and therefore don't necessarily create a demand excess of supply. Right? Monetary policy should be tight if demand is too much in excess of supply. And if you push out the supply side of the economy, then that's not something you worry about.
There's a duration mismatch here, though. The idea that if you reduce regulations and you allow people to build supply, that it takes a longer time than, say, if you give people $2,000 checks right up front that they can spend immediately, or if they get a rebate.
Okay, I'm going to fast forward a little bit because I think we got the idea here.
It's a lot
forecast dependent, blah, blah, blah.
So, policy like that hasn't been formalized. It hasn't been introduced. We don't know the parameters of it. That's until after the next FOMC meeting.
So we've got to wait for that too.
We've got to wait for that.
Did you see that, Lisa?
Yes, I did. I saw that we have to wait, and it's not clear exactly when we're going to get it.
On the website, they come back to work, and they've got a ton of work to do all at once. And so, we have those too high. I don't know what the right level for the stock market is. And I think that it's a very challenging question to be. Also a mistake, as I said before, to ask people to experience job losses because you think the stock market is too high. I don't know what the right level for the stock market is. And I think that it's a very challenging question to be able to answer credibly, and to say that we need to create job losses in order to sort of restore the stock market to some level that we think is more reflective of fair value is just not a policy view that I hold.
A lot of people have come on this show and said that right now the Fed is stuck between a conundrum of the K-shaped economy, where you have people at the upper end who are doing just fine and are supporting consumption, and people on the lower end who are experiencing a lack of wage gains, and they're experiencing those job losses more significantly. How concerned are you about sort of your dual roles of trying to help prop up and prevent some of those job losses from really escalating, while at the same time potentially cutting rates would exacerbate that K-shaped and only exacerbate what you're seeing?
They task us with addressing all social problems in the world, inequality one of them. They tasked us with tackling to take is to stabilize employment. And while discussing the subject of inequality, continued to go up as a result of our policies. That's not something that they would welcome, and it's not something that I would welcome either.
Governor.
Okay, fine. What did Williams say?
Monetary policy is very focused on balancing the downside risk to our maximum employment goal and the upside risk to price stability. My assessment is the downside risks to employment have increased as the labor market has cooled, while the upside risks to inflation have lessened somewhat. Underlying inflation continues to trend downward, absent any evidence of second-round effects emanating from tariffs. For these reasons, I fully supported the FOMC's decisions to reduce the target range for the federal funds rate by 25 basis points at each of its past two meetings. Looking ahead, it's imperative to restore inflation to our 2% longer-run goal on a sustained basis. It's equally important to do so without creating undue risks to our maximum employment goal. Right. I view monetary policy as being modestly restrictive, although somewhat less so than before our recent actions. Therefore, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral, thereby maintaining the balance between the achievement of our two goals. My policy views, of course, will, as always, be based on the evolution of the totality of the data, the economic outlook, and the balance of risks to the achievement of our maximum employment and price stability goals.
Okay, that's pretty straightforward.
Governor Martin, good morning.
All right, so let me beam this in really quickly. Reduce this. Redundant. Okay, cool. That's it. All right, so let's go see. We've got the CPI news. We've got the Qs are doing really well, now recovering. You've got, it looks like finally you got the flush out completing. NVIDIA gains the lead. That's good. So they went green. You got this big recovery in the consumer stocks that have sold off heavily. And you've got the VIX coming down nicely with the exception of fat brands here. So this is really good. And hopefully it can hold into the close as volatility comes down. We can kind of chill a little bit. But let's analyze. Let's try to put together a little bit of what's going on today. All right. Let's put it all. Let's do a summary here. Let's take a little sip, summarize it all. All right. The last few days have been nerve-wracking, and on our jobs release day, we actually got pretty decent jobs data. We mentioned that there was one thing that can help alleviate some of the pain. If you go back to my 5:30 a.m. live stream, you'll see that I mentioned the Federal Reserve has until next Friday to do something for us. See, the Federal Reserve might not quote-unquote care about stock prices, but the Federal Reserve does recognize that if the stock market falls in a weak economy, you can actually induce a recession through a stock market decline. It's exactly what happened in the dot-com bubble. We didn't have underlying economic issues. We had a stock market that created underlying economic issues when the bubble burst. Now, the Federal Reserve wants to make sure we don't go into a recession. That is really bad for unemployment. And it's really hard to get those jobs to come back, especially in the day of AI, or the days of AI. So what happened this morning? Well, after the market's been selling off and selling off and selling off, sure enough, this morning, the Federal Reserve is unleashed to prevent a continuation of the dip. And just this morning, we get John Williams telling us that, hey, we should actually still be cutting in December. Now, it's not worth really listening to what they all say, but what matters for Williams is even though he's a dove, he's a voting member of the FOMC, and he's a mid-range dove. So he's kind of a centrist. He's like 51-49 on the dove tilt. He's not like mega dove like Myron, who's going to tell you we should always be going for a 50 basis point cut, because that's what Trump wants. Although Myron has really shaped out to be a pretty good member of the Fed so far. I think he's got very transparent ideas and good ideas. But this was impressive. And just Williams's talk alone doubled the odds that we were going to get a rate cut in December, which is great because we just got rug pulled on the October CPI data. We will not be getting CPI or inflation data for October, and we're not going to be getting a jobs or CPI report until after the next Fed meeting. That led to a lot of nervousness in markets that at a time where liquidity isn't that great, the Fed was potentially going to stay restrictive. And I think that was one of the large contributors to a lot of uncertainty with what's going on in markets. And if the Fed doesn't cut, it actually strengthens the dollar. And if you strengthen the dollar, you potentially set up for more of that Japanese carry trade, either the fear of the carry trade or that sudden unwind. It's the shifts in policy that trigger the carry trade, not a consistent movement in one direction. It's the sudden shift that you have to be careful of, which we talked a lot about yesterday. So today, we kind of got bailed out by the Federal Reserve. We're now sitting, we went as high as a 70% chance of getting a cut December 10th. Right now we sit at about a 63% chance of a cut. Now we still have a sensitive market that's still a little shock prone, but we're seeing volatility come down. Part of that is because yesterday, a lot of people were pounding the pavement going, oh my gosh, Michael Burry is right. But if you actually watched my video breakdown of what the catalyst for pain yesterday was, it had very little to do with Michael Burry being right or wrong. It doesn't really matter where Michael Burry sits because the Burry problem is a long time in the future issue. It's not a now issue. Instead, what you really want to pay attention to, in my opinion, is the potential default of a company like CoreWeave. That is critical for this AI play. And right now, fortunately, we're getting some recovery on the Qs. We're coming back to 595. My expectation, my hope was that we would go bullish today, but I will say we had a lot of selling we had to get through at the AM. AMD went down, Nvidia went down. The first, 2-3 hours here, we were straight down on Nvidia and AMD. Fortunately, it seems like some of that selling flush is now behind us. Volatility's coming down. And unless you're in fat brands, you should be seeing a recovery today. Now, we've been dumping on fat brands for the last couple days, over 2 or 3 days here, mostly because I can't believe a company with $2 million of cash has over $1.5 billion of debt. But that's really a topic for a different video. But what you'll notice is there's a lot of buy the dipping going on here. You've got Target up 5%. As they're offering a 5% dividend, people are buying the consumer dip. Chipotle, which has been tanking, is getting a bid, up 4%. Red Robin, which is issuing $40 million of stock because they're out of money, they can't pay their bills, they have horrible financials, they're up 5% today. Dave & Buster's, which screwed up massively on CapEx spending, is worth less than $500 million now, up 5%. Cheesecake Factory, Macy's, a lot of these consumer beaten up stocks are rallying today. And I think a lot of it is because of the belief that the Federal Reserve is going to come prop the stock market up. And frankly, you kind of want that. You want the Fed to pump the bags. Because if a company like CoreWeave goes bankrupt and it goes full circle, much like Circle stock did, going full retrace here, full 100% retrace all the way back down to the zero line. If CoreWeave goes full circle and we go down to 33 or worse, CoreWeave goes bust, you have to understand the greater implications that it's going to have for NVIDIA. See, I wrote this note yesterday in the Meet Kevin app. NVIDIA is basically a bank. And so what I wrote is, let's ignore inventory for a moment. Let's just assume that the inventory issue is just part of their increasing sales at NVIDIA. What's more interesting at NVIDIA is actually its accounts receivable profile. You're going to notice that accounts receivable on January 26th showed that 33% of their top customers had receivables outstanding, 33% of total receivables outstanding at NVIDIA were from their top customers. Concentration, right? That concentration has nearly doubled. You're now at 65% of your receivables are concentrated in your top 4 customers. Now, in my opinion, while a top customer could be a company like Microsoft, I think Microsoft has plenty of cash to pay for their bills. But a company that I don't think, 2 companies I do not think have plenty of cash to pay their bills, xAI and CoreWeave. CoreWeave has tanked from all-time highs. It's de facto bailed out by NVIDIA. And xAI is trying to raise $15 billion so they can pay their bills and actually buy their chips. Okay, Amazon and Google, they're buying NVIDIA chips, but they're also building their own chips, and they've got cash flow. But CoreWeave and xAI, I don't know this because it's not disclosed, but I wouldn't be surprised that CoreWeave and xAI are in this top 4 customer batch who hasn't paid their bills yet. That could be one of the reasons why we're seeing finished good inventory rise. It all comes down to this customer concentration of they don't have the money to pay for their bills yet. And understand the cycle of how this works. This is how NVIDIA is the bank. NVIDIA is like the J-POW of AI. NVIDIA wants to sell CoreWeave chips. Okay, simple, right? But CoreWeave can't take delivery because nobody will lease to them. So NVIDIA ends up guaranteeing CoreWeave. CoreWeave then gets the lease because they have NVIDIA's credit backing. NVIDIA gets to hold their inventory until CoreWeave can actually take it and raise the money. Hopefully the stock pumps and then they can pay NVIDIA more. The more CoreWeave pumps, the more NVIDIA can sell them stuff. NVIDIA wins on a stock pump. They're also hedged with the $470 million they have in escrow. But remember, NVIDIA is committing to $26 billion of leasing. They're basically forcing people to install NVIDIA chips. So if CoreWeave tanks more, it's really bad because then NVIDIA loses a customer, they lose the debt, they lose the leasing tenant, and NVIDIA gets a bunch of data center space that they really don't want. So stocks tanking can literally burst the bubble. So you want the Fed to bail out stocks. Is it sustainable? Maybe not. But you want the Fed to come in and go, no, we'll keep cutting rates. And I think that's what you're seeing today. Now, it wasn't as clear of a trade because clearly the market had to go down before it was able to go up today, intraday. I was really looking for green out of the gate on these Williams comments. I was bullish on the Williams comments because I'm like, this is good. This means the Fed is using the last week they have before the blackout window to put a floor under this market crash, stop the bleeding, because the bleeding could actually impose the very recession the Fed is trying to avoid. Now, when you look at the fundamentals, because I'm a big fan of looking at the fundamentals, you know this, okay? I don't need CNBC to tell you what you already know.
Kevin is much more interested than most people, by the way, in the balance sheet.
So when we look at the sheets for CoreWeave, understand this. CoreWeave has $2.5 billion of cash. Do you know how much they have in debts? They have $8.6 billion in current debt. They need to pay $8.6 billion of bills. They have about 4.2 total in liquid. So they have at least $2, more than $2 of debt, of bills to pay in the next 12 months, then they have cash to pay. CoreWeave needs money. How does CoreWeave raise money? Right here. They issue debt and they go IPO. They go public, right? So they issue stocks and debts. Look at their cash flow statement. This is a horrible, 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 horrible cash flow statement. Especially if this bubbles, this gets worse. Why? Because look at this. Net cash provided by operations, $1.5 billion. How much are they spending? $6.2 billion. They're basically borrowing money and blowing over $4.7 billion in CapEx, which is essentially everything they raised from their net debt issuance, because they refinanced some debt over here. So they took out a $7.5 billion loan, but they paid off a $3 billion loan. So their net financing is $4.5 billion, right? Okay. So they're borrowing to build. We know that. But the only way you could keep sustaining the Ponzi, the circular financing, there's only one way you could keep the Ponzi going. Especially, I mean, they do have, in fairness, they do have net income if you add back into depreciation. You got to give them that. But the only way you keep this going is by keeping the CoreWeave stock buoyant. Okay? It doesn't have to be 100. It doesn't have to be 200. It just can't go bankrupt. Because if CoreWeave goes bankrupt, that's what starts the Michael Burry cascade. The Michael Burry problem is not what yesterday's problem was. I want you to pin this stupid stock to your whatever broker you use. If you use Webull, great. If you don't use Webull, you can sign up. Use my affiliate link, meetkevin.com/Webull. I think they give away free stuff if you use my affiliate link. Anyway, paid promotion.
Paid promotion.
But understand this. You need to have CoreWeave pinned, because if CoreWeave keeps falling, guess what happens when a stock falls? It's a simple game, folks. When the stock goes down, fewer people want to buy it. That's human psychology. I'm telling you. You know what people want to buy right now? Apple at a 4 peg. You want to know why people want to buy Apple right now? Because it's going up. It's simple. Human psychology is very simple. Stock go up, people want more of it. Stock go down, people don't want it. It's the opposite, not always, of what you want to do. Like, I don't want to buy CoreWeave just because it's going down. I'd rather buy the dip on something else. Like Netflix. That's a cash machine, and it's got a horrible technical trend right here. Like, this technical trend right here is not good, and we're losing 108, which is not great. It could be $90 soon. But this is a phenomenal cash-generating machine that is a beneficiary of the advertising wave that's coming from LLM's overspending on advertising, which will be the next phase after they overspend on chips. That's to come. That's my thesis. Okay, I'm not trying to distract from the point. The point is, the Fed needs to keep CoreWeave buoyant. Because if CoreWeave goes bankrupt, NVIDIA takes a giant L, the ability to finance all of the other data center plays goes to crap, then NVIDIA's earnings plummet, and then you got yourself a recession driven by the stock market. So the Fed had to utilize their blackout window. They're not blackout window yet. Their blackout window starts on February 29th. Okay, in English, basically, about 2 weeks before the Fed meeting, the Fed is told, okay, boys and girls, we're about to have a meeting. Class is about to be in session, so now you have to be quiet until the teacher shows up. Okay, that's a blackout window. They're not allowed to say anything. They don't do their circuit or whatever. So they only have between now and next Friday to pump the odds of a rate cut. Now, if you want to guarantee the odds of a rate cut, I almost promise this is what's going to happen. Monday, Tuesday, Wednesday, right before Thanksgiving, you're going to get somebody else come out from the Fed. I don't know who it's going to be. Another voting member from the Fed is going to come out, and they're going to go, because we don't have the data yet, we're probably better off doing one more cut, and then we'll let the data guide us. That's all you need. All you need. One more person from the Fed, and you will guarantee the rate cut for December. The odds of a rate cut will go from 63 to 100%. They'll be like 98% or whatever. Then we'll get our rate cut December 10th, and hopefully we could just be bullish between now and then. Then you get the data the week before Christmas. That's the hope. Hopefully, this Fed bailout is a way of providing liquidity again. Now, is it possible that it fails? Of course. If this isn't enough, like if this becomes a continuation of profit taking because, we're seeing that liquidity stress, whether it's in repo. I know the chart's not as high as it was, but you have to zoom out and recognize we usually don't use this facility at all. So the fact that it's being used at all is a sign of liquidity stress. Or the fact that you're getting issues in private credit, those issues don't go away. You have to look at the 48 Pallets bankruptcy-ish. I call it a bankruptcy, okay? Ugh, stupid paywall here. 48 Pallets basically went into bankruptcy, in my opinion. So what happened was 48 Pallets last year took out $1.75 billion of a loan. You can get this all in the Meet Kevin app, by the way. 48 Pallets took out a $1.75 billion loan. Then they started making payments in kind, which is basically like, hey, just add it to what I owe you. Okay, so they stopped making payments in August entirely. So they go payments in kind since I think like Liberation. Then they stop making payments entirely. And then what happens? They fail. And so now you have KKR, BlackRock, and Carlyle who are like, oh yeah, these are worth 86 cents on the dollar. Now they're actually worth 46 cents on the dollar. Now they're actually worth 0. You basically have another private credit failure on your hands. Yet another one. Like, this keeps happening on like a daily basis. You get these private credit failures. That liquidity issue doesn't go away because of the Fed being bullish. So, I'm not saying that all of our issues are gone. I'm saying the Fed is trying to prop up the market. Now, people always leave, but Kevin, the Fed says they don't care about stocks. Of course they have to say that. But if you study history, you'll understand that if the stock market tanks 30%, we are going into a recession. The fundamentals of this economy are too damn weak. If CoreWeave goes bankrupt, it's going to take down NVIDIA. And if NVIDIA gets taken down, it's over. We won't make a dime on stocks for 10 years with buy and hold. It'll be 10 years before you make a buck again. It'll suck. So of course the Fed's trying to prop this up. Again, does it mean the liquidity issues are gone? No, of course not. Does it mean OpenAI is going to be a success? Not necessarily. I mean, the information on the front page of the information, they've got a piece on Sam Altman basically saying that, hey, dude, we might, let me get out of incognito here. We might be facing some economic headwinds here because Google is basically kicking our AWS. And to me, that's a sign that they're hitting, I mean, somebody mentioned this in the comments, and I think they're right, an innovative wall. But it's also a sign that, hey, if your competitor is doing better than you, and you're going to have economic headwinds because of that, it means you have too much debt. It means you're relying on the market financing you instead of your competitor. And you're worried about not getting the financing you think you need to keep innovating because your innovation has stalled. It's not a good thing. Like, this doesn't save OpenAI. This doesn't save the private credit disasters that are going on. It's just a way to engineer a bounce in the stock market. And I think you're seeing that in these consumer names. I think these consumer names are directly responding to Williams. You'll notice Target straight up since Williams talked this morning. Straight up. And trust me, I am very tempted by Target. But, you know, they're very cheap. Their sales are declining, though, so that's the problem. Walmart is destroying them. And this is probably a Williams bounce here. Nothing fun. There's nothing fundamental in these consumer stocks going up. The consumer is still getting reamed. So, like, Restoration Hardware, I know it's exciting that it's up 9% today. I recognize that. But if you do a fundamental analysis on Restoration Hardware, first of all, that's your weak chart. But if you actually do a fundamental analysis on Restoration Hardware, you know the true pain for Restoration Hardware is not behind us. It's ahead of us. I'll give you a spoiler alert as to how bad this is, okay? So, spoiler alert. I'm going to go to the Stocks tab in the Course Member tab. This is our IP, man. I shouldn't give this away. Okay, hold on. Where was it? Okay, all right? So all you have to do, if you have the Meet Kevin membership and you download the Meet Kevin app, if you're part of the Alpha Report, you get the membership, right, in the stock, so you get the stock tab. You can download the app for free, but you don't get the stock tab unless you're a member, right? Anyway, so you go to the drop down on the right, you click RH. And then you could look at, things that I've highlighted. You could download these things or whatever. You could look at my fundamental analysis. But listen to this line. I'm just saying, the high-end furniture market, it's not coming back for years. And all it's going to mean is there's a lot of people going to close. He was basically about to say people are going to go bankrupt. A lot of people are going to close. A lot of jobs are going to be lost. And I think people have to consider that. That's your CEO freaking out. Freaking out. Crazy, right? Oh, did I say February 29th? Yeah. November 29th is the blackout date. Anyway, so like, then when you look at the fundamentals, if you actually go look at the income statement, you should study the Restoration Hardware income statement and understand, have they paid any money on tariffs yet? And when you answer that question, you'll know, is this pump of 10% on Restoration Hardware fundamental or momentum? Spoiler alert, it's momentum because of Williams. Intraday momentum, not long-term momentum here, right? So intraday bounce on these consumer plays that have gotten really cheap. I promise you, Red Robin is going to look at this and they're going to issue a crap load of shares because they need to pay their bills. So this pump is because of the Fed. It's engineered by the Fed and it's great. That's what you want. I mean, Bitcoin was almost under 80,000. So we're getting a nice little bounce and recovery. Fingers crossed it lasts. Now, if you're worried about liquidity, watch the close, okay? Because this close, coming up in 3 hours when the market closes, hopefully we regain 595. If we can regain and hold 595, we could be bullish through December 8th. That's right before the Fed meeting. But I think we'll get our rate cut over there. So let's hold 595 and let's hope the Williams pump actually holds. Rejecting this wouldn't be good. Kevin Hassett's yapping now. Nick T's talking about Kevin Hassett. Kevin Hassett, who is a candidate for Fed chair, tells Larry Kudlow the only way to explain the Fed decision not to cut in December would be anti-Trump partisanship. Right. Well, because they're under the impression that Democrats ruined the economy and therefore we need to cut. All right. Whatever with the political partisanship. That's not partisan, I guess. Anyway, so keep in mind, I am still buying the dip at a fraction of what I've sold. Okay, so I sold a lot over the last couple months. I do not think a recession is a foregone conclusion. I think there are buyable dips. I think there are stocks that I want to continue rotating into over the next 10 years. So I'm not like, oh, we're definitely dead in the water or whatever. I'm still mid-range on the bear bull scale. And what does concern me, though, is this. I posted this yesterday on X. I'm at RealMeKevin if you want to follow me there. But anyway, I wrote, wow, Robinhood. Oh, and by the way, the delayed CPI data doesn't, whatever. The jobs data matters more. But anyway, I wrote, wow, Robinhood is offering, I miswrote this. I corrected this in the comments. But basically, Robinhood will let you take on $16 million of margin if you have $6 million in a Robinhood portfolio. This is insane in my opinion. So this kind of leverage I didn't even see in 2021 when I played with margin a lot. Like if I had $1 million in M1 Finance, they'd let me take like 30% on margin, right? Maybe up to 50% on some platforms. You really had to go to some of the advanced trading platforms to get 3 to 4x margin. And Robinhood is literally letting you do 3 to 4x margin right now. And that's scary to me. I think that's very dangerous. And you should utilize bounces like this when we do have these bounces. You should utilize them to ask yourself, am I too high in debt? Should I trim a little bit here? Should I take some profits here? And should I move into a little bit more of a safer, sleep better at night position? My argument is absolutely. But then again, I don't know your personal financial situation. So I just think these are bounceable opportunities thanks to the Fed. And maybe they give you an opportunity to go diversify into something fun like House Hack. Why?
It's because that's why.
Exactly. So anyway, that's my take. All right, what else? So let's see here. What else? Okay, yeah, somebody here in the chat's like, that's just for day trading. Somebody else says, no, you can hold it overnight. Somebody else says, what's the 595? The 595 is on the Qs. You can see that line right here. All right. So, okay. Cool beans. Let's listen in over here for a moment.
With the S&P 500 at session highs right now, up by 1.2%. For the week, it is still down about 1.7%. You can see the Russell 2000 is the clear outperformer here, gaining almost 3% on the day. This after John Williams, the president of the New York Fed, says he sees room still for a rate cut in the near term, presumably in December. The two-year yield basically unchanged at the moment, 3.53%. We did get word that there will be no October CPI report, just like there won't be any October jobs report. We also look at Bitcoin, which had been moving in tandem with equities, but now you have it moving on its own lower, once again below that $90,000 level at $85,000.
Well below.
We will check in with Mike McGlone a little bit later on Bitcoin. Let's highlight a couple of individual equity movers first, though, and check in with our Nora Melinda for more. Hi, Nora.
Hey, Scarlett. I've got my eyes here on shares of Gap, up more than 8% right now. This is after its sales beat expectations. Really
well, it's all the consumer plays are bouncing today on that Fed talk.
Old Navy brand, but also looking at Banana Republic here, not so good in terms of the metrics that we saw from Athleta, but we are definitely seeing shares up higher here with a lot of Wall Street celebrating what they're seeing here from Gap. But an area that hasn't been so good, of course, is what we've been looking at all week, and that's a lot of the tech space here. We've really been seeing a bit of a sell-off here after those NVIDIA earnings that we saw coming through. But one bright spot here that we've really been looking at is shares of Alphabet. Shares of Alphabet have really been higher here, up about 7% on the week. And this is after we did see its Gemini 3 AI model threatening the likes of ChatGPT from OpenAI here. So we really are seeing some growth as we look at shares of Google, of Alphabet here. And we really are also moving toward the drug space. Eli Lilly here. This is the first healthcare company that we are seeing crossing the $1 trillion mark when we think about market cap. This is really some strength that we're seeing, not only from its pill that they are projecting to reach $95 billion by 2030. But we are also just talking about the fact that we are seeing Eli Lilly and Novo Nordisk having a plan to sell obesity drugs directly to employers. So we are seeing shares of Eli Lilly up about 36% so far this year. And wrapping things up, you mentioned it earlier, we're looking at everything going on in the crypto space. We are really seeing a lot of these companies moving in a silo, really taking a departure from that move in tandem that we did see earlier with equities. If you take a look at strategy shares, down about 1%. We are seeing a pop up here in terms of Coinbase and Robinhood, up more than 1%. But if you take a look at Bitcoin in particular, we are seeing Bitcoin down for its worst month since the crypto slump that we did see in 2022. So lots to keep an eye on right now, Scarlett.
All right, thank you so much. Bloomberg's markets correspondent Nora Melinda. And as promised, we're going to dig a little deeper into Bitcoin because it fell as low as 80,000 overnight, to as low as 80,000 overnight. And this week on Bloomberg Crypto, of course, we talked about the price action and we spoke with Reserve One CEO Jamie Leverton, who's been in this industry for roughly a decade. Here's what she had to say about the consistent sell-off.
This is not where I think any of us expected to be. I've actually been on record over the past few weeks saying I didn't think we would see the return of the typical 4-year cycle. And I've never said that on record before. And yet somehow here we are. I'm still very bullish on the indicators that we're seeing coming out of the market. I don't see anything structural that should suggest we tip into a typical bear cycle. So really...
by the way, I just want to shout this out. You can either get this through the Meet Kevin app or email. Some of you really like the email, and I see your responses in there and stuff. But if you haven't gotten it yet, get the Daily Wealth. If you just go to meetkevin.com/data, there's some good productivity, happiness, wealth, money, tax hacks, and things that I'll email out. I put it together. It's not AI. You know, if you want the email version of that, you could drop it in. So you go to meetkevin.com/data. You drop your email in here, hit subscribe, and you'll get the daily wealth every day. I think it's pretty valuable. I write it. Again, none of this AI crap going into it. It's just sort of like my opinion stuff. Yesterday, I thought had a really interesting one as well. Or just get it on the Meet Kevin app. Like, if you don't want another email, just get the Meet Kevin app. And then you could, you know, sign up for the notification on that there.
Bitcoin's in actually some corporate treasuries. It's entrenched in the stock indices. You mentioned MicroStrategy earlier, Michael Saylor. It's all part of the market now, and it's more significant than ever. And even potential, maybe Mr. Williams, who hinted at potentially easing his watching Bitcoin, because it's a tremendous risk asset leading indicator, and it's breaking down like a risk asset should. That got way too expensive. The key thing is it's that time of year. You don't want to be looking to, you know, to buy things that add to profits. You're getting stopped out. And to me, that's the risk, is if this trickles down the stock market, which is my base case, then the dominoes tumble. And that's just normal post-inflation deflation, which we're way overdue for.
So when you look at Bitcoin's price action of late, what's noticeable is that it's hit a lower low for 11 straight sessions. I believe that is a record streak down. What's the significance of that and other technical factors, technical indicators that we often cite when looking at Bitcoin? Why is that more indicative of price action than anything else?
It's just classic hitting stops. The market got over leveraged long, and it's hitting. It's going lower. The key thing is it's the whole.
It's always debt, guys. It's always debt that sends these companies into bankruptcy and stocks down. Always debt.
Well, Bitcoin's different. Well, they're finding out it's not. It's just one of millions of cryptocurrencies. It was just first. So to me, that's the key thing now. Is everything's trickling down. And as far as how it happens, I don't know. But it's so algorithmically driven, and bots, you just hit stops, you liquidate, and you go lower. But that's a classic example of a market that just went too far. The key question is where it stopped. Now, it meets really good support around 84, around 80 overnight, but it's what's going to be happening Sunday night. And that's when it broke down on the year, was last Sunday night. So I think there'll be a lot of people watching it this Sunday night.
Yeah, I'm also looking at the CRYP Go page on the Bloomberg terminal. You type CRYP and you get kind of an overview, a monitor of all the cryptocurrencies that we track, not just the original one, Bitcoin, but Ether, Tether, XRP, and, you know, kind of down the market cap list. Everything's pretty much red, except you have a couple of
getting towards 525 here, or 595, which is really important. That's great.
Everything kind of depend on where Bitcoin goes. If Bitcoin can't hold on to certain key levels, Dogecoin or Cardano or Solana can't get a bid either.
Absolutely, but some of all those alts, kind of like bogus coins, some call them, are dragging Bitcoin lower. And that wasn't supposed to happen, but it is happening. It's just a fact of the statement, and prices going lower. So you mentioned Tether. Tether is a significant part of that technology. It's the crypto dollars in that space. Now, there's a bull market, the proliferation of crypto dollars, but it's replacing the need for peer-to-peer cash through Bitcoin. So to me, the whole space is just in a normal bear market way. It's way overdue. And the key thing is, where does it go from here? The key thing is it's basically counter volatility on the stock market. When stock market volatility is very low, Bitcoin usually does very well, and stock market volatility is very low right now, which means Bitcoin has much more room to go lower if and when stock market
if volatility goes up. That's actually one of the aspects of the CNN greed and fear indicator that hasn't actually gone into extreme fear. At least I don't believe greed and fear, because volatility, while it moved up, I don't think we got to extreme fear yet. So let me see here. Volatility only barely got to fear. That's one of the aspects that just didn't get to extreme fear yet. So yeah, I mean, we were at a 6 on the extreme fear yesterday. Hey, bought the dip yesterday. Bought today too. So, but it's still, I'm more net rotating out of bigger positions. Still, I don't want to pass up on a red day to build up some of my positions.
These comments from Zelensky.
Well, Scarlett, at this point, we haven't heard from the White House so far today, but we know that it has been a busy day of calls for the administration. The Army Secretary Dan Driscoll is overseas having meetings with Ukrainians, and reportedly Vice President J.D. Vance also had a call with Zelensky earlier today. Now, we heard from White House Press Secretary Caroline Leavitt yesterday that said that both sides have been engaged when it comes to ending the war in Ukraine, but according to a document obtained and reviewed by Bloomberg News, this U.S. Russia-led war proposal that could potentially end the war would offer significant concessions to Russia if followed through on. Now, you mentioned some of them at the top there. This would
It'd actually reintegrate Russia into the global economy if they pull it off.
vast region, despite still holding on to about 15% of the territory. It also would include Ukraine abandoning its NATO ambitions, holding elections within 100 days of any potential agreement, as well as significantly decreasing the size of its military. The stakes here, of course, are being raised, as Bloomberg News is reporting, according to people familiar with the matter, that the White House is prepared to withhold intelligence sharing as well as military supplies to Ukraine if the country does not commit to this plan. We'll see where negotiations go. It is important to mention that in terms of what Ukraine would be getting here, we are seeing the firmest security guarantee put on the table to date from this White House. It would include something that includes a Article 5, similar to what we see invoked with NATO as being a potential protection for Ukraine if they agree to this plan. Scarlett, at this point, President Trump has said that he is giving Ukraine until Thanksgiving to make a decision, but he himself concedes.
Somebody says, how can we have extreme fear so close to all-time high? Well, because it's the delta that matters, like how quickly things change and roll over. That's what the sort of weights are in whether we're at extreme fear or fear. It doesn't look at valuation.
Both have been very, very clear about where they stand, but both are also very skilled politicians.
Right, exactly. It definitely feels like a made-for-TV moment. As of now, it is closed press. We are expecting it to open up, but it would be an understatement to say that this meeting is high stakes. There is a lot at stake here, as President Trump has threatened to withhold federal funding from New York City, which for fiscal year 2025 received about $10 billion and is banking on an additional $7.4 billion for fiscal year 2026. Also, take into account that the Trump administration has already frozen about $18 billion worth of broader New York State infrastructure funding when the government shutdown began. Now, the White House Press Secretary Caroline Leavitt was asked yesterday directly whether or not the pair would discuss unfreezing these funds, and she said that we'll just have to wait and see how the meeting goes. It is our understanding that Mamdani requested this meeting with the White House, and the transition team says that it will focus on affordability as well as public safety. Scarlett, as you well know, this White House has been trying to recontrol the narrative when it comes to cost, so potentially there could be some room for cooperation here. I did speak to one Democratic strategist who told me that we shouldn't underplay President Trump's affinity for New York City, but as you alluded to, there has been a lot of criticism and a lot of threats from this White House.
All right, good stuff. Bloomberg Washington correspondent Tyler Kendall, and of course,
all right, let's see what else we got. Thanks, Tyler.
Club Black Friday. Terms and restrictions apply.
What the hell is this?
Whether you've been hurt in a car, motorcycle, or trucking accident, what you do next matters. Make sure to call Sweet James Accident Attorneys.
Oh my God,
Every month, my
working.
firm and I help hundreds of people.
I can't get rid of it. What happened? Oh, there we go. Oh, wow. I guess it lagged. 86. Ugh. Come on, homie.
Is it gonna be pink?
Oh, it's Taylor Riggs.
Coming up,
Salmon.
part gym, part spa, part social club. We're telling you how the luxury wellness trend is taking self-care to a whole new level.
Boring. Boring. All right, good. So Q's now holding on. What do we got here? We got 110 basis points. It's pretty good. We're 592, knocking on the door. Let's hope we can hold it. We'll see how the close goes. You know, maybe we can stick it. So that'll be exciting. I'm gonna go do some work. So I like hanging out here, but I gotta go do another job too. How's Hack? So we'll see you soon.
Kevin's somebody we'd consider, Chip.